Now, in recent years, a trend has developed where companies are staying private for longer. I pulled out some statistics from the United States that demonstrate this. Historically, new ventures that managed to go public took between 4 to 6 years. Today, that period has extended to over 10 years. Actually, between 1998 and 2000, there were about 300 IPOs per annum. Today, there are less than half this number each year. The net result of that trend is that the number of listed companies in America has dropped 50% over the last 20 years. And the number of companies with revenues of around $50 million that used to IPO regularly has also fallen significantly. What's the reason for this trend? Well, there are 4 key ones. First, more capital has become available in the private markets. Second, companies are opting to stay private longer due to less scrutiny being faced by privately held organizations. Third, there's a real burden to being listed. The cost, regular reporting, other regulations, calls and presentations to shareholders, and risks relating to disruptive active investors. And lastly, some of the large VC-funded firms such as Uber and Airbnb generated significant losses for many years. As a result, they only pursued an IPO when they determined there was a much clearer path to their profitability. Now, the implications of this trend is that individual investors are unable to directly invest in startups. Yes, they may get indirect exposure through institutional investors like pension funds, but there are few direct opportunities. And because startups are only going public much later, most of the value generated by them is accruing to the institutional investors. What's amplifying this trend is that institutional funds are also much bigger today. So to move the dial on their portfolios of investments, they're looking for larger investment opportunities. So a private company that listed early would result in a smaller IPO. And that smaller IPO would suffer the same discrimination of being too small from institutional investors. So to repeat an earlier point I made, gains and profits for startups are now accruing largely to VCs, to institutional investors, and to high net worth accredited investors, as opposed to individual investors participating in public markets.